The markets have been in an important advance since March, and here we are in June asking the question, using the Wyckoff method, whether or not the markets are at or near an important peak. Let's apply our Wyckoff method tools to this market and see whether or not they are exhausted and ready to take a rest. Hi, I'm Bruce Frazier, your host, and this is Power Charting. Let's have a quick look here. Very exciting news is that Roman Bogomazov and I have just completed a very unique basic charting course. This course is a combination of video and readings and is an on-demand course and is oriented or designed for individuals that are new to technical analysis that would like to learn more both about the principles and important characteristics of technical analysis and also with an orientation towards the Wyckoff method. For many of you, this would be possibly too basic. It could be great for your friends that are interested in learning more about how to apply technical analysis as a methodology in a really powerful way. So go check it out. Go to wyckoffanalytics.com and you can go to the on-demand courses, technical analysis courses, and here it is, basic charting. So for your friends that are just learning the basics of charting, they could find this to be a very valuable addition to their studies. So with that, let's get started here, and we are going to do a checklist for a peak. We're going to look at the Wyckoff investment cycle to start and evaluate the evolution of an uptrend. We're going to do this quickly, but this is an introduction. We're going to come back to it later. Putting the recent rally into context, is the rally approaching exhaustion? And so is the uptrend done? Now this chart's a little fuzzy. You've seen it in the past. I think it's absolutely brilliant. It was done by Roman in the late 90s at GGU. And this is a Wyckoff investment cycle. This is really the foundational approach to the Wyckoff method, starting from accumulation to markup, distribution to markdown. I think this model has tremendous benefit or tremendous relationship to the market as it's unfolded since 09. So we had this big accumulation phase in 09. There was a spring at the end. Then there was a series of reaccumulation structures on the way up. And since January of 2018, we have been in a range-bound condition, and we're asking the question, is this distribution? So have we, with this sharp break into the March lows, produced an important break in the market, and the rally that we're in is at a last point of supply? We're going to come back to this model in the future, but I want to introduce it to you. And also you'll see that RN Elliott and the Elliott wave counts are included in this classic structure because Dr. Pruden was also a great proponent of Elliott wave. So with that, this is an actual chart that we published, and it was inspired by the Composite Man article that Roman, Hank, and I wrote back in the Technical Analysis of Stocks and Commodities magazine. And so you can see here, and this was back in, I don't see when it was. So anyway, the article, we put up a point and figure chart at the time, and you can see here that this count went up to, of the accumulation, here's the spring, it counted up to 17.6 to 19.2. Well, we know the market has gone much further than that. It's quite remarkable that at the count line of 8,100, Dr. Pruden published an article prior to this one which made the case for this move up to 19.2. And people at the time thought that that was kind of a crazy call. And in fact, we know that it turned out to be, if anything, conservative. So here are a series of reaccumulation counts on the way up. These objectives all were reached on the way into the final count of 18.4, 19.2. So then Roman and I did an additional count where we took this area that was the 2015-2016 reaccumulation structure and counted this. It counted up to a maximum count of 30,000. Here's another count that we did based on the climactic structure of January 2018. This whole count counted up to 30,400 to 31,200. So we know now that we've gotten very, very close to that 30,000 count. And so this was a great addition and also established that there was fuel in the tank for a much larger move than the base count that took the market up to around 19,200. And we included this additional pullback, and this increased the count to 32,200. So we actually took the count and stretched it even further, and this is a legitimate count. So we'll come back to this again, but the question is, we've gotten close to 29,000 or 30,000 here, and there is some counts that argue for a slightly higher objective. So is it possible that this could happen? Stay tuned, and we will come back to this at a later time. So here, let's get into recent activity. This is December 21st of 2018. The CNN fear and greed was all the way down to 3, extreme fear. Then a year later, almost to the anniversary, it was up to a reading of 91. And thanks to Joe Turner and Martin Pring for the slide. And the highest reading that we saw on this at the end of 2019 was 94. So extreme switch from the emotion of fear to the emotion of greed in the course of 1 year. So let's look at what actually happened at that time. So here is a count that I did in January of 2019, which was the completion of the low into the Christmas Eve low here. This count across was, and we'll blow this up so that you can see it better. And this count across the count line at 22,668 counted, and this is intraday data, 5-minute data actually, counted up to a remarkable, from 22,668 counted up to 29,254 at the extreme. And so there were a number of people that thought that we were nuts to publish this count. It's actually a blog. You can go pull this out, look at it, study it. Well, here is that count right here, and counting up to 29,254. And here is a reaccumulation count, 29,509 to 30,177, which is in the area of these counts we just looked at on the prior slide, which was the very large 2015-2016 reaccumulation count. So also notice that the market from August of 2019 into the end of the year, this is the end of December, was becoming overbought in the channel. So keep that in mind, because we're going to look at the current channel that we're in now. So with that in mind, here's the reaccumulation count in August of the that confirms the count from January of 2019. And this slide we presented on January 8th of 2020, and it's 29,509, 30,177. And I'm going to show you where the market went to exactly. This doesn't show the complete move, but you can see here that this count, primary count, goes right up into this 30,000 area. The other thing I'd like to show you is this is a yearly bar chart of the S&P. And at the end of the year, I showed 2019, and 2019 closed the year on the trend line. And so my conclusion was at the time that it was unlikely that the market was going to be able to just run away from this overbought condition on a trend channel that started back in 1942 and then touched in 1973, 74 to create this big trend channel. Now, notice what's happened is that in 2020, so far into June, we have a decline that went through the lows of the 2019 range and then rallied up, and the rally went up and touched the top of the channel again. And here we are just hovering at the channel resistance line, overbought line again. Okay, let's just keep that in mind. And this chart here just shows what a wickedly wild 2019 advance closing on the highs it was. So we got up to this 29,509 area. This is December here, December, January right here. And we said at the time that extreme call buying was taking place at this level, and that speculators were just feeding on calls at the time, very bullish, and that they were most likely going to be punished for doing this. And of course, this was right at the end of the year. And we showed this chart on January 8th in the Wyckoff market discussions. So also this chart here just shows that there's hardly any SPY short selling taking place at the end of the year among the lowest readings that you can find for SPY short selling. So very little interest in speculating that there would be a market decline. Okay, so here we have shown this chart repeatedly. The thing I want to do is show you this 29,568. This was the final print high in the Dow Jones. Remember, 29,509 was the count objective here, 29,254. They confirm each other. We went just slightly above the 29,509 count at the highs in February. So just eked out these objectives on these two important point figure counts. And also notice this, that we are over the overbought line the second time. First was in January, then February, and also just hovering at this steeper uptrending demand line right there. And when it went back through the overbought line, under it went back through the steeper demand line, all hell broke loose. So there was an extreme overbought condition at that time. Oh, let's look at one other thing. This is as of June 10th. Got to keep track of the time here. And you can see that we have a gap in the Dow coming at the end of a long advance. We're going to look at this some more later on, but notice how the markets become very excited into these high prints that we have as of the 10th. And here we are on the 11th when I'm recording this, and the market has become volatile and is declining. So we will see more about that in a minute. Here's a tactical dilemma. So this is what I believe to be the very important structure that was defined by the January buying climax peak in 2018. So much of what's happened in the markets is really informed by this buying climax and this automatic reaction, resistance, support, and how the market has basically revolved around this area with widening volatility. So extreme volatility in a broadening formation. Notice how the market has gone over the broadening formation here and became overbought and then touched the uptrending line here of this overbought line. So two forms of overbought in January and February, which produced this wicked decline. Well, notice what's happened here. We have an important channel. Here's a low here, a low here. Here's the overbought line. And notice with a climactic gap, there is a throw over. I should blow this up for you so that you can see it. Gap here, gap here. It throws over the top of the steep channel, but it also throws over the top of this resistance line, which is formed by the epic buying climax of January 2018. Fascinating. Well, here's a little bit of a clue. One day later, after I made this chart, the Dow is back below this resistance line, which shows this resistance line is still important and still in force as it was here, as it was here, as it was here, and then ultimately after this big advance as it was here. So very interesting period that we're in. Don't have a lot of time, but I want to show you this, and that is, and you can go back and look at this blog. This blog has Tactical Dilemma, July 15th of 2018. Look at this accumulation structure. 3 segments are counted here. The first segment goes 26.1 to 26.7, which is the epic buying climax peak of January 2018, which we just looked at. Then there's a larger count, goes 27.7, 28.5, and then finally there's a count across this whole area, 29.3 to 30,100. So these are huge counts at the time, and these counts are being taken at around the 24,100 level. So look, 2,500, 4,300, 5,900 Dow points of count. Well, guess what? They all get fulfilled. So point and figure is amazing tool. And the thing that is a dilemma, which we couldn't know at the time, was that this count 26,951, well, we went slightly above the 26.7 count here and then turned back down into the range bound condition, and that was the decline from October to December of 2018, which put in that important low that we just looked at the point and figure chart here and here. Then we have the second count, which goes 27.7. Well, this count goes up to the broadening trend line here. So this count becomes very close to the second segment. The third segment, 29,300, is fulfilled when the Dow goes to 29,568. So we had like 3 point and figure counts that all pointed to that 29,500 area. And then we had Hank's big 30,000 count that was off the 2015, 2016 lows or a reaccumulation structure. And so all roads are leading to this 29,500, 30,000 area where this big decline occurs. The dilemma is this is the count area that we just looked at, and we went through the count area here, cleared it out, and then built a new count for this run up, beautiful run up, beautiful campaign. Question I have for myself is, should we not take this count or consider it because we took out the low of this area here? And so discussion for another day, but I just want to throw that out there for discussion in the Wyckoff market discussions and here also. Here are two trend channels. I just want to keep going here. And again, we'll come back to these things. This chart is actually through today because there's weakness today in the market. And notice how we have a channel, important channel. We draw the peaks off these two highs. We have an overbought thrust right here. Look at the big decline that we get downward off of this. This is the February peak. And then look at this. It goes right down to the oversold line in the channel. Amazing. And then an epic rally off of that that goes up to the top of the channel again, and it is now in an overbought condition and has just shown weakness back into the channel. So this is, I think, a very important event and suggests that at least for a time, we may have to come back into the middle of the channel. Possibly we consolidate near the highs of the channel, which would be bullish, but we will keep a close eye on that. Here is also, this is the Qs, both charts. Here is a important accumulation in the Qs. We're going to look at a point and figure in a minute. Look at the upward channel that occurs in the Qs on an intraday basis. This is a 2-hour chart, and overbought at the extreme here into June. So we have a run up and then a throw over, and here we are, and this chart is through the 11th today as we're recording, and it's fallen back to the area of the channel and is actually back in the channel again. Okay, let's keep going. Here is the Dow again. Here's the channel we just looked at in the Qs in the Dow. So here's the upward sloping demand line. Here is the overbought line. Right at the end, we have a gapping market here and here, throwing over the top of the channel we've drawn, and it has come back in. Now, this chart was drawn on the 10th. So the other thing I'd like to point out is here's our broadening formation here and here. Look at how in the broadening formation there is a decline below the broadening formation and a snap back. There's a accumulation count here and an important rally follows. So these broadening formations are working beautifully, goes over the top of the broadening formation here, but fails back into it again. And then here is the resistance of the 2018 buying climax. And here is the support line. And notice how the support line comes into play here again, and then the rally up to resistance. And important thing, we're back below the resistance line, the buying climax resistance line right here, which is this chart, which I put in here so you could see today on the 11th what's happened. Here is the zone that we're in right now, back into the trading range. Got to keep going here, more to do. S&P, here's a chart. This is the 30,000 area count that we took in the reaccumulation that went up and set these highs up here in the Dow, but it's the same structure more or less in the S&P. And so there's a beautiful reaccumulation, a jump out, a back up, trend channel forms off this low and this low. Now, look at how this demand line here just keeps working. So here's the October to December 2018 decline, breaks it down. Then there's a rally that goes up along the demand line all the way up into the January, February peak, throws over overbought condition here, and then a massive failure. Broadening structure, look at this, broadening structure. Well, this red arrow right here is where the S&P is on the 11th midday on a very sharp decline. So a an important rally here into a climactic surge. So here's the climactic surge right here, and now in one day turns back down and is back below this rising trend line, which is a broadening formation structure, and we're back in it again. So interesting position for the S&P. We have a couple minutes left. Here are some important counts. So this is the accumulation count on the daily for the SPY. This count goes up to 328. We've gotten as high as 323. Now, I may have too aggressively counted this. I may have been better off counting to here, but that's okay because I got a really good accumulation structure and it produced a very important rally in the market, and we have to be tape readers at the end. So we're basically 2 boxes from fulfilling the minimum count of this base. But in the Qs, look at here, all the way across, we have this beautiful count, and counts 244, 260, and we've gone up to 247. So we have now fulfilled this box here and fulfilled the minimum objective of the Qs. And also these distribution counts worked really well off the February peaks. Okay, here is the Qs. This is the accumulation count off the March lows. And you can see that we just looked at the daily data, but the 30-minute data confirms it too. 240 to 248 on the intraday. You can see this beautiful structure here in accumulation, and there's a wider structure that we may take into consideration and keeps us somewhat bullish for the longer perspective. But we've gone to 247 to 82, which is just below the higher objective in this count range. Okay, and then here, this is the Qs on using 15-minute data, 3-box reversal. You can see this count also confirms what we just looked at. And then finally, in the little bit of time I have left, I just want to point out that there's extreme bullish sentiment going on right now. And this extreme sentiment is more extreme than it was back in February to December, and that was a record call volume, more of a record call volume now. So sentiment is very extreme. Here's our checklist for how things turned out. So we have a point and figure accumulation count fulfilled, climactic surges with gaps. We are at the end of the second quarter, so there's a rush of buying going into the quarter end, overbought condition, a rising trend channel, and then sentiment is at historic extremes. With that, I'll say so long, see you next time.
This is a brief demo about how to scan for things that made a new high earlier in the week or the month. Rather than using a daily scan, which would say that it didn't make a new high today, by using a monthly scan, it'll get anything that was above this previous time period. So to do that, we go into technical scans and we create this month's high is greater than last month's maximum over the previous 12 months. I've also set it up with a close greater than $5. But when we run that scan, obviously it brings us our data, and what we can do is we can sort it into industry and sector, and Buckle was the current stock that I had up there, but look at how many apparel retailers are also hitting new highs in this current month. So this would lead you to believe that there's some strength in that sector.